In trading, it's important to understand the dominant force in the market. In this week's Market Minutes, I'm going to discuss that, my regular weekly market analysis, and the trade of the week on McDonald's. All right, welcome to this week's Market Minutes. So, trade with the force. What do I mean by that? It's important to understand the dominant force in the market and also in your individual trades. There are times when the overall market dominates, and if so, you need to focus your analysis on the overall market chart. There's also times when individual stocks are dominant, and so that's where our focus should be, on the charts of the individual stocks. Now, the market tends to focus on only one or two things at a time. We need to understand them and trade them accordingly. So right now, for example, the market is really focused on trade with China and trade disputes, as well as interest rates. And the market has been the dominant force for the past 5 or 6 weeks as we've been in a correction. And therefore, it's been more important now to analyze the chart of the S&P 500 or the Dow 30, the NASDAQ 100, than it has been to focus on individual stocks. And that's because the dominant force in the market right now is interest rates, China trade, and that's really affecting the overall market indexes. All right, let's get into this week's market analysis, starting us off with the US markets, as always. And we always start with the chart of the S&P 500. Now, last week, if you recall, I said that we were probably going to get some weakness this week, and the reason for that was the upward trend line on the intraday chart was broken, and that led to this pullback. Well, on Thursday, we had a break of the downward trend line, and that moved into Friday with some upward bias. And so the bias right now should be to the upside. We haven't had a lot of enthusiasm yet, but we've built a rising bottom here, and that implies that optimism is starting to build. I don't think upside is considerable. We've got our sort of limit on upside right there. It's going to take a catalyst to get through that upside barrier. And if the catalyst doesn't arrive, I fear that the market may get impatient and we could roll over again. So going into next week, I think you favor the long side. But if this little upward trend line gets broken, get cautious. And once the market rallies up to this resistance, expect that it's going to take a real catalyst to break it through. Moving along to the longer term chart, and we've talked about this a number of times, but that long-term upward trend line on the weekly was broken. It was not broken on the monthly chart, but that break on the weekly really points to uncertainty among investors right now. And I think that's one of the main reasons we need to be cautious. It's going to take time to rebuild confidence after the break of that upward trend line. Looking at the small cap US stocks, similar situation. That long-term upward trend line was broken, and that means the bias is to the downside. We would have to break this pullback line, get back above the trend line for health to be restored to the small cap stocks. And I would be very worried if we break down through the lows that were set a few weeks ago. So this is a negative chart, and generally I think you want to be cautious with the small cap stocks until this chart can be repaired. Moving along to the Canadian market, we of course always take a look at the TSX 60 ETF, symbol T.XIU. And we didn't have a lot of volatility this week. It's been real narrow volatility after the upward move there. We're kind of taking a break underneath this resistance. And again, I think this taking the lead perhaps from the US markets, there needs to be a catalyst for a break to the upside. Right now, you know, it's stabilizing after the sell-off, but it's really not showing a lot of buyer optimism. Longer term chart, we're stuck in that sideways range that the Canadian market has been in for almost 2 years. You know, it's been trading in this sideways range for some time. We oscillate around in that range. We did bounce off the bottom, and so next stop would be the top. But again, we need that catalyst, something to get investors excited. And generally speaking, I don't see a lot of really good opportunities in the Canadian market. And so I think that you have to be very selective, very picky. You know, this market really dominated by institutional funds that just have to own the Canadian stocks that make up their funds. But otherwise, there's not a lot of interest in individual names here. Nothing too exciting going on. TSX Venture just continues in that downward trend. We actually hit new lows this week as the cannabis stocks continue to see some pressure. They can't really gain a footing. And until we break that downward sloping channel, we can define it. Just draw a line across the bottoms and draw a parallel line across the tops. I didn't do that exactly, but you get the idea. And until we can break out of that channel to the upside, you should be relatively cautious with the microcap stocks in Canada. All right, let's move along to the currencies. And the US dollar has been an important force in the market for the last 8 or 9 months. You can see that US dollar trending higher. This week we hit new highs, but we closed below the open. That's why that candle is red. And that implies that there was some selling pressure through the week, and it probably sets up for a pullback near term, perhaps next week or the following week. I expect we'll see a little bit of a pullback. That doesn't mean we're going to break the upward trend line, but it does mean probably some weakness in the very near term for the US dollar. And that should be supportive for commodities, which we'll talk about in just a moment. Moving along to the Canadian market, you can see that we've been in this bearish pattern for some time. And until we can break out of that bearish pattern, I wouldn't get too optimistic, but it is stabilizing and it is trying to build a rising bottom. And so there is some potential there to break that downward cycle. I think it's going to really hinge on maybe oil getting some support. We'll talk about the oil chart in just a moment. So relatively remain bearish in the Canadian dollar, but there's a glimmer of hope if we can break that downward trend line. On to interest rates, and of course that is an important force in the market right now. A lot of concern about whether the US Federal Reserve is going to tighten monetary policy too quickly, and that is why we have seen the bond market drop off, which means interest rates have risen. But over the past 2 weeks, we've had a little bit of a reprieve as the market has moved up in the bond market, which means interest rates have come back. With that said, it still is a bearish pattern given that we broke down through support. Yeah, maybe we come up for a little bit, but ultimately it looks more likely to go lower than higher, and that will be a bit of a headwind for stocks. Now, if we can break the downward cycle, break the cycle of falling tops and switch to rising bottoms, well, then the market's going to have that on its side, but it hasn't happened yet, and wait for it to happen. All right, moving along to commodities, and of course that strong US dollar has hurt things like gold, and not so much oil longer term, but in the last couple of weeks, oil has been pulling back. If we see the US dollar pull back a little bit, that should be supportive for gold, which of course broke its downward trend line about 5 weeks ago, but it just can't get out of its way and get up through that resistance. And until it does, I'm not going to be that excited because this initial break was not from a rising bottom. We are forming a rising bottom now. That's the first sign of optimism in a trend reversal. And we now need to break up through that resistance. And if that happens, yeah, maybe gold gets a little better, but generally speaking, it's a boring place to be right now. Not boring is the oil market. We've seen such a sharp sell-off after a pretty good run higher. But in the context of this run, think about this. The upward move here lasted 7 or 8 months. And in the course of 6 weeks, we have given back all those gains. Now, oil is fairly oversold. By that, I mean it has fallen too far, too fast. But until it can break that downward trend line that I have drawn, I would remain bearish of oil. It is due for a bounce. There is some catalyst coming up that could make it bounce in the form of the OPEC meeting that's upcoming. But until it breaks the downward trend line, get out of the way of oil and oil stocks. So my rating's then neutral on the US and Canadian stock markets, but remember there's that potential that we could get worse again given the uncertainty and the fear that people still feel. We still see that volatility, which indicates people are feeling fairly uncertain. Gold neutral on both time frames and oil bearish on both time frames. US stocks continue to show abnormal volatility, but are gradually basing and setting up for the next trend. Interest rates and trade disputes are key, to the US stock market. Now, Canadian stocks are relatively stable, but they lack a catalyst for good trends that we can trade. And generally speaking, I find this market a little hard to find opportunities. Oil is oversold and it should be bouncing, but until it does, it should be avoided. Gold, as I said, relatively boring. Wait for some show of excitement. All right, let's take a look at the trade of the week. And I'm looking at McDonald's on two different time frames using my action candle indicator on both. This is the daily time frame, and McDonald's gave us an action candle about 2, maybe 3 weeks ago, right there, as it broke through this resistance level from optimism. That was a pretty good setup. I was a little concerned about this resistance level from old highs, and if we draw this line across, you will see that that is exactly where McDonald's stalled for 7 or 8 days. Well, then it broke out, and it has continued to march higher. On Friday, it broke out of that flag. And so if you are long of McDonald's, I think you are in good shape, and I would stay long. What I want to point out is how we can take that same indicator and apply it to a shorter term chart. Looking at what happened on Friday, there was also an action candle on the open. I bought McDonald's on the open for no other reason than it triggered that abnormal activity that I look for, and it marched steadily higher through the day to finish with a 4RR win. That means for $100 risked, there was a $400 profit, $1,000 risk, $4,000 profit. Well, hopefully you've enjoyed this week's Market Minutes. If so, please click on that like button, subscribe to the channel, click on the alarm icon to get instant trade alerts. If you want to know more information about the Stockscores website and education, you can go to stockscores.com or check the notes in the description below. Have a great week in the market and trade.